So I look for that and you think, okay, well, what's got more adoption capability right now, Bitcoin or ETH? Now, Bitcoin's changed somewhat with ordinals and other stuff, right? But really, ETH is where everybody's building everything.
Outlook.
So look, crypto tends to be forward-looking. So it follows the liquidity cycle. And the liquidity cycle is kind of how much the central banks are printing, really. And so we kind of know that as economies slow down, or rates get too high and the economy slows down, the probability going forwards of them having to cut rates goes up. So our liquidity indicators at Global Macro Investor back in June started bottoming. And that's when I bought ETH added to my ETH into that low. And then the rest of our indicators kind of bottomed in October, just as the markets bottom, and it worked really well. And so the crypto markets have been forward-looking. ETH seems to be more forward-looking than Bitcoin right now. And so they have been rallying on liquidity conditions easing somewhat. And these are global conditions, not just the US. So we had the Bank of Japan increasing their balance sheet, we had the Bank of England and a few others here and there, and other liquidity indicators doing that. So that drove that forward. NFTs are like the assets in the ETH economy. And if you think of, usually assets are the last things to bottom, so the stock market usually bottoms first. So like right now in the US, the stock market bottomed in October, but the housing market's still going down, right? And we're seeing it with Rolex watches as well, because people's discretionary spending has gone down and nobody's got any capital gains from trading. Everyone's just taking losses all day. So therefore, there's little demand for NFTs. So we're in that bottoming phase for NFTs. I've been mentioning this recently as well. And it's the lagged effect as the ETH economy starts to recover. As the ETH economy recovers, we'll see a lot more activity in crypto, and then we'll see NFTs starting to pick up as people got money to spend on trophy assets or whatever within the ETH economy. So that's where I think we are now. My work suggests that this is only going to accelerate, even though today rates are really keep going up at the moment. And while the Fed look like they're pretty much done, I mean, inflation keeps falling and everyone's kind of lost sight of that. But I think the bond market's having to suffer from too much issuance of new bonds because the government's having to pay the interest on the debt. And the interest rate has gone up so much that they have to sell more and more bonds, and the bond market doesn't like that at all. You'd see the same in crypto, anything else. When there's excess supply, the price collapses. So that's what's going on right now, which I think only exacerbates the chance that things get worse, and therefore, perversely, things get better for the markets because they look forwards to, oh well, if things are really shit now, they're going to have to start cutting rates and they're going to have to start doing quantitative easing. Well, I never got out. Because I learned over time that the best strategy is to have a long-term time horizon, and then when these kind of business cycle troughs, in crypto they're 80% down move, but they're in that long-term uptrend, right? And the magic is to add to your positions every time it hits the long-term uptrend and everybody hates it, right? That's really where you make all of the money. So what we do is we look at these indicators with a year-on-year rate of change, and what you're looking for is liquidity to stop going down. And then it starts ticking up and maybe it crosses through zero, or not that, but just on its way up. Usually that's the signal that liquidity's bottom. And look, it's probabilistic, so it's not always 100% certainty, but it's like, listen, the price has collapsed, all the worst news in the world is out, everybody hates each other on Twitter, everybody's short, everyone thinks everything's going to go bust and it's the end of the world. That's usually a good time. And if the liquidity indicator is saying, hey, listen, the absolute worst is now behind us. Also, it's really interesting because a lot of people get caught with present day conditions, their narrative, and then saying, well, why is the price not lower? Particularly like in the stock market, right? People are like, why isn't it lower? There's going to be a recession or whatever. Everyone priced in last year. Right? We had an 80% bear market in crypto plus. I mean, if that wasn't a recession, then I have no idea what is. The NASDAQ was down 35%. That's a recession. That's a regular kind of recession in the NASDAQ. So it all happened last year because markets are forward looking. They could see what was going. They could see that the Fed jacking up rates at the fastest pace in history was going to cause an economic slowdown. Now, so it actually doesn't matter if we get a hard landing, soft landing. That was all last year's game. This year's game is how much liquidity comes into the system, even without liquidity, as long as the Fed are not just, if they just take their foot off the beach ball that's underwater, it's going to burst out, because these things are in secular uptrends. Both crypto and technology stocks are in this secular uptrend. So as soon as you kind of stop the rate of change of rate rises, I'm chain agnostic. What we're trying to do here is, look, I'm not Web3 or crypto agnostic. I'm a passionate believer. I want to educate people and help people understand that journey and help institutional investors to corporations to anybody use this technology, because we all passionately believe in why. But at my level, I want to make money out of it too, right? It's this magic thing where you can kind of help change the world and also make money at the same time. So all I do is just look at a couple of things. One is I use Metcalfe's law, which is like how you value network. And it sounds like it's very fancy, but really it's some proxy of number of active addresses and the value that gets transacted on that chain each week or each month. And you find that once you use a measurement like that, pretty much all of the chains are valued accurately versus that activity. So I look for that and you think, okay, well, what's got more adoption capability right now, Bitcoin or ETH? Now, Bitcoin's changed somewhat with ordinals and other stuff, right? But really, ETH is where everybody's building everything. Okay, and it's a large asset. So then I just look at the chart of the Bitcoin ETH cross, and this bear market, ETH did not sell off versus Bitcoin. In the bigger picture, it's really been in this kind of wedge pattern that usually looks like it's another breakout to come. So that kind of makes fundamental sense to me, because there's more activity on chain, and so I think price drives it. Now, I then started looking at other assets, and the one that I noticed got a lot of adoption, a lot of developers, a lot of activity was Solana. So I look at the Solana ETH cross, and it's like, hell, that looks like it's going to break out too. So my allocations are really something like 80% ETH, 20% Solana, and there's other bits and pieces there here and there, but really it's like it's a concentrated bet. I could change my mind if things change. I could be 100% Solana. I could be something else. But this bit, the kind of middle to top tier, is an easier trade than trying to find the next big thing. And I'm never going to make the 500x doing this, but I'm unlikely to lose all my money. If I look at the dust in my bags from the last cycle, where I tried to buy like a equally weighted basket of smaller stuff, all of that was a failure apart from very few things. So I'm like, okay, I'm just going to focus on it. The other one that I'm actually focused on, I've mentioned this a few times before, I don't really have much of a position in it, but is Doge. And the reason being, it has a lot of owners, but no network effects, apart from memes. If Elon uses it, so right now, most people don't realize this because half of Twitter is American. We don't get payments from Twitter because we can't have Stripe here in the Cayman Islands. And that's true everywhere. So there's a whole bunch of people all around the world who use Twitter who can't get payment. How do you create a global payment system for everybody, or just use an existing crypto? And Elon's made this very clear that he wants to use Doge. So if I can just instantly pay you in Doge for something via Twitter, and you can convert it back into your currency of choice, kind of works. So I've got my eye on that, and that could be a fun one. But otherwise, I just try and stay away from all of the FOMO. I've got a lot of friends of mine hitting me up about Pepe and stuff like that. I'm like, just not going to do it, because as soon as I get into it, it's too late.